Hey, thank you guys again for joining us on Future of Fortunes. Good morning, good afternoon, good evening, whenever you're listening to this. This is me, Jake Claver, along with my co-host, Byron Wolf. How are you, Byron?
I'm great, Jake. I'm great, man. How are you doing today?
I'm blessed. We're recording on a Sunday again.
Yeah, yeah, hitting those
So,
weekends. I love it.
before we just started this deal, we were talking about China and Russia stockpiling gold here recently. So this episode isn't going to be on any particular topic, but it'll be on the changing global financial system and how we see things playing out. So we went over DAOs in the first episode and then taxes last time. In this one, we'll just kind of give our perspective on maybe the things that might manifest for the financial system in the future and maybe how you can potentially take advantage of it. I think some of the things we'll discuss in this episode, well, disclaimer, none of this is financial advice. It's all entertainment and for educational purposes only. Do not make any investment choices based on the information presented here. Please discuss that with your financial advisor. So
Yes.
now that we got the disclaimer out of the way,
Yep.
um, some of the things that we touch on here, I think, may have already happened by the time this episode airs, but we're going to run it down anyway. So go ahead and get into what you just mentioned.
Yeah. So if you've been following the news, I'm not talking to you, Jake. I know you do. Talking to our listeners. If you're following the news, and I'm sure you have at least heard some snippet of how China and Russia are acquiring gold at record numbers. The amount of gold that they're importing from Sweden has gone up tremendously. Their holdings have really, kind of maxed out, and they're continue to acquire at a record rate. So there's been some discussion that it's possible that they're trying to start a one world currency that would essentially go against the U.S. dollar, or the euro, whatever you want to look at, and that is going to be a stable coin backed. As far as what I've read in the news, and again, this is all very new at this point. So by the time you're listening to this, this may be more ironed out, but we're trying to bring it to you as fast as we possibly can. But based off of that, they're going to peg the that currency that hopefully will be a stable coin backed, and Jake and I have our thoughts on what that coin will probably be, but we don't want you to take that as investment advice or anything like that. That will probably slip out. But this is just our opinion. Again, this is not backed to anything. We're not telling you to invest in it. Buy at your own risk. But anyway, so this gold backed currency that's going to have a stable coin backing in the cryptocurrency market. This is
Let's
something that's on the up and coming.
so let's just get into what a stable coin is and a few of these other terms, just so our listeners kind of know what those are. So a stable coin is a currency that's issued on blockchain that holds a stable price, and ideally, uh, based on regulations that I believe will come out, will have to be backed by physical value of some kind. So we saw what happened with Luna and their stable coin, which was an algorithmic stable coin. Um, Tether also has some issues with this. They've rectified some things though. So USDC, Tether, I'm trying to think of DAI. There's a bunch of different stable coins that hold a dollar value, and they're the popular um, trading mechanism. So when you exit out of a trade, so that you can keep your money on the exchange easily, people will hold their money in a stable coin, and these often pay a little more APY than your general bank account, and so that's kind of why they're favorable for people. But to Byron's point, China has already issued a CBDC, or a central bank digital currency, the digital renminbi or the digital yuan. And they're part of the BRICS nations. So you've got Brazil, Russia, India, China, and South Africa, who have formed kind of a coalition. There's been multiple other countries recently that have joined that. Saudi Arabia, I believe, was the most recent.
Yeah.
And so they have a system that they're calling One Belt, One Road. And it's a trading route that allows them to transact with all of those countries, and the US and Europe have been excluded. And so they're basically tired of the supremacy from the US dollar. We've seen what we can do with sanctions when Russia invaded Ukraine. We sanctioned them, removed them from their ability to operate inside the SWIFT system, which is the dollar dominated messaging system that banks use. And then we froze their assets in Switzerland, which has never been done before. They've remained neutral over the last 100 years. So that basically scared a lot of these G20 nations, and I think they knew this before, but they're aware that we can do that now, and we will do it basically. So trust is kind of lost that we wouldn't, sanction a huge global economy like China if they were to invade Taiwan. We would. And they need another way to transact amongst themselves around the US dollar. Otherwise, it would cripple their economies. And so they've been dumping US treasuries and US dollar denominated debt. Had a blistering pace over the last decade. They're significantly down from where they were in 2009, 2010 during the Great Financial Crisis. In 2019, gold was made a tier one asset inside the banking system. Prior to that, the only tier one asset, or riskless is what tier one means, was U.S. Treasuries. And so for the past 5 years, for sure, Russia and China have been stockpiling as much gold as they could. And when we sanctioned Russia, they backed their ruble with gold at 5,000 rubles per gram is their stability or their peg. And when they did that, their currency reversed and lost and gained all of its power back against the dollar and other currencies, and is currently above where it was in comparison to prior to them invading Ukraine. So gold-backed currencies are coming back, which is good. It's good for normal people if they have that ability and they can not use fiat. So fiat is money that's printable by the government. It's trusted that it has value, but it's currency. And the difference between currency and money is money has a stable value, whereas currency is just a way to transact. Yeah. So it's exciting, and then at the same time very scary, because if the dollar is removed as the global reserve currency, which I'd speak to a lot of people, and most people are aware that that's probably coming at this point, but they don't know what it's going to be. And we don't need one other country that controls. So even if we had the BRICS nation issued their own currency and it was backed and all of those things, they're still going to have Triffin's dilemma if it becomes globally used, which is basically the hollowing out of their manufacturing, shipping it offshore, because other countries require their currency and will pay or want to sell them goods so that they can get that currency to acquire energy. That's kind of what we did with the petrodollar. So the US went to the Saudis in 74 and said, we'll back you with our military if you only sell oil in dollars. And they continued to do that until just recently when we pulled out of Iraq. And now they're selling to Russia and China in their currency. So the global financial landscape is changing, and blockchain is here to allow them to innovate and bring in their digital currencies in a stable way for their countries. Now, go ahead if you have any comments or thoughts on that.
Yeah, so I do want to bring. So just like you said, the Russian currency is now backed by gold. I think that's accurate, 5,001. So with what China is doing currently, and this was recently in the news, is they were averaging somewhere under 20 tons monthly that they were importing from Sweden. They're at 60 tons now per month. by a couple of news sources that's been put out there, and so that's a significant ramp up. And so the expectation is that the yuan will now be gold backed, just like Russia is. So if you have two of those major powerhouses that are trying to exclude Europe and the US, and then they back their currency by gold, which everybody knows the US dollar has not been backed by gold since 70 something, been a long
71.
time. What wait, was a year?
August 15th, 1971.
Yeah, 1971. So having two large countries' currencies backed by gold legitimately, if they can legitimize that, that's the claim. I mean, obviously, there's nobody going in and checking to make sure, but there are multiple large-scale transactions that are occurring for transferring that gold in. China's getting theirs from Sweden right now, and I've read from multiple news sources around 60 tons a month. So that is a significant amount of gold. I don't think it's going to take China very long to make the claim that the yuan is now completely backed by gold. And when that happens, if they were to decide, Russia and China were to decide to kind of come together to create that stable coin that was backed by those currencies, backed by that gold, it is my opinion, again, my opinion, that would devalue the US dollar significantly. And I think that they would leapfrog the US dollar as a global currency were that to happen. So that sounds like a lot of doom and gloom. I don't mean it to sound that way. I think it's very important we know this. But
what would that do to your stocks?
Yeah, I mean, you'd see a significant drop. And so
I think it would do the opposite. I think you would see a melt up because the dollar would lose value in comparison to other things, and people would exit the dollar. So they would move from risk off to risk on in order to hold their purchasing power. So I think potentially, again, this is just based, again, my opinion.
Yeah.
I think people would pile into stocks at an extreme rate like we saw in 2020 when the dollar was dropping in value because they were printing so much of it, right?
To get out of the US dollar, I would agree. My only kickback to that would be I think we would lose some confidence in US based companies. And I think we would see a lot of that capital go outside of the US as Russia and China tend to take this over and the US dollar drops. I agree with you 100% that stocks would go up in the short term, but I think we would lose some confidence in US based companies. I think we would have a healthy increase in global companies that could operate in multiple countries, multiple currencies. All that to say, I'm not disagreeing or agreeing with you. But we're 100% going towards some form of digital holding of wealth. Like holding a dollar is no longer powerful like it was when our parents or our grandparents held that dollar. So nowadays, when you see a lot of the gurus and all these other people online, they're saying, oh, hey, hold your cash, build up your reserves. Everything's going to be an opportunity. I don't know, man. I think if you're holding on to cash right now, you're just losing that. I mean, look at inflation. You're going to be losing money at a regular rate just by holding on to this cash. But the stable coins, like you just explained, and I loved your explanation, they're pegged, they're supposed to be stable, right? Now, I mean, everybody knows stable doesn't necessarily mean stable. We've seen the collapse of Tether and some other things. So, right. But if you can hold it and it's not going to be 100% affected by where you're at country-wise or whatever it's based on, and even if you're US based, but all of your holdings are in Europe based crypto or whatever, if there's something that is a more global holder of wealth, to me, that's the smart play because there will be opportunities. I'm not going to take away from that. And I do agree with you. I think the stock market will see a little bump. I just don't think that it's going to be a long-term play. The U.S. is going to have to make some kind of major action to bring that confidence back, And I think that I'm not a huge fan of the China, Russia little conglomerate, but I mean, I have to give them respect. I think it's a smart play to try to get some legitimacy to their currency, and their country.
Yeah, I think people are concerned that we're hiking rates here in the U.S., and I think they're front running what's about to happen. So in order to maintain trust or give you an incentive to hold US dollars, they need to raise those interest rates in comparison to other places in the world who are easing and still printing money, QE. So that would give people reasons to hold on to dollars. And it is, just like you said, a lot of people are advising or stating that they are holding on to dollars because there's going to be opportunities. Um, Gold has been
You brought
money.
up a great point on the stable coin. Stable coin, no matter what they do, they can raise it, right? But the stable coin is always going to provide, well, I don't want to say always. That's the definitive answer. It is, in my opinion, that I feel like the majority of the stable coins will stay slightly ahead of whatever the banks and whatever anybody else is going to provide you as far as a return on the holding of your money. And so I love when you said that. That was a great point. The stable coin exists specifically for that. So it's a little bit better return. So no matter what they do, if the US bank says, hey, we're going to start paying you 8 cents or 8% on your money when you have it with us. Well, stable coin is just going to bump up a little bit above that. Mm-hmm. And so they're probably not going to make those, those motions in the extremes like that because they know that. But they will try to play. And I'm not trying to take away from anybody that falls for these, but they're going to play to the majority of the population that see the US bank as the safer play on holding your money. And I would argue that I get it. Wild, wild west for cryptocurrency and all that stuff. 100%. I agree with that. But do your research. We talked about looking at white papers, on an earlier podcast. Like, yep. Do your research. Find out what's going on out there, because there are some that are out there that are truly closer to stable in the sense of what a stable is, or a stable coin, than what we've seen. And if it is too good to be true, then it's probably not true.
Yeah, if it's anything over, and I've stated this before, 8, 10, 12% interest, I become very skeptical. Even with the rates, being raised to where they are. So homes are now close to 7% when you're financing. So we're getting back up there, which is good. That's good for the average consumer, because hopefully they will have an opportunity with banks to hold their savings or whatever they have in an account with them and earn some decent interest, because that hasn't been the case for the past my lifetime, 30 years. Maybe when I was first born.
Exactly.
But so this is kind of how I see this playing out. I don't think there will be a one world currency in that China and Russia will have the same currency that they use. I think currencies will be sovereign and backed by each individual country, and issued on a ledger that they trust. And there will be a centralized token on that ledger that allows them to transact the value from one to another. And there's a DEX that's built into it that doesn't require them to pre-fund accounts. So you have counterparty risk in the current banking system because you have to hold other currencies, and you have to have accounts in those countries in order to settle transactions into those countries. So right now, if you wanted to settle in Turkey, you had people coming to work in your country, and they earn money and they want to send it back home, and they get paid in the national currency where you are, but their family uses lira where they're from. You would have to work with a provider that's willing to hold the lira while it's melting down and losing value. And banks aren't going to want to do that, because they're losing money just by holding that currency. Yeah. And so you need a system that allows you to pay in whatever you want to pay in, and the other party receive whatever they want to receive without the risking of the capital. Yes. And that's what I believe is going to be used does. It has a DEX that's inherent to the protocol that allows you to swap from any asset into any other asset that's issued on the ledger. And if you had two CBDCs issued on that ledger that were backed by whatever they're backed by, or even if they're not backed by something and they are hyperinflating, you could exchange one for the other. So
yeah, 100%. And we are at that technology level where that's doable, right? So we're doing real-time transactions. This isn't the old, the switchboard where you pick up the phone and you say, hey, give me Bob. And then,
Hmm.
Myrtle down at the switchboard, connects you with Bob. Like, that's not the reality. So, we have, there's bots, there's technology that's doing this stuff, and it's real time, right? So I agree with you. No bank is going to hold it, just like you wouldn't hold it. If
Yeah.
somebody said, hey, man, hold this Luna for me, and I'm going to, it's going to continue to drop in value. I'm going to give you, $1,000 worth of Luna. I need $1,000 back. Well, Luna is continuing to drop in value. Like, nobody's going to do that. There's no advantage to that. Unless you're just a big gambler.
Well, you'd have to be charging a lot of fees, and so that's the complaint a lot of people have. So, just as an example, people come to the U.S. From Mexico and then want to send money back home. Well, the peso continues to drop in value in comparison to the dollar, and it takes multiple days for those transactions to settle, depending on what bank you're sending it to.
Yeah.
So, in that situation, we've got to pre-fund accounts in Mexico with pesos, and you're going to charge a premium for that transaction. So currently, people come and work here in the U.S. and they work for effectively around a whole month just to pay the fees to the banks to send money back home, because it's around 10% of every transaction that the banks will charge you on the way to sending that money, because they've got to make money on it somehow, you know.
Yeah, or I mean, even in a altruistic society, they have to at least break even, right? And so it's not even so much that they're looking to make a profit, which they are. I'm not taking away from that, but like nobody does things to lose money. Like, that's not a reality. I mean, the government does, but that's a whole nother podcast. But I mean, we're not doing things so that we can continue to lose money. And I agree with you. Like, you have to cover that, or you just don't exist. Like, there's no way to run a business, a bank, or anything that is a for-profit and take losses, or be a gambler and say, oh, well, it's been dropping, but this is going to be the one time it's going to go up in value. Like, we're not trying to do that. We're hedging that. And I agree with you. Like, the instrument that we both agree with, that we think is going to do extremely well, handles that problem, so to speak. It allows us to transfer those things, and I think that it has a great chance of being what is chosen for those transfers of wealth, the transfers of currency, back and forth. I think that as Russia starts to do business with other countries, China as well, like, there's going to have to be something, because there's still money to be made in arbitrage. Most of that's done specifically by bots. It's all kind of computerized, but there is still money to be made, and the swapping of one thing to another, because there's never a set value that stays the same throughout the whole process. So having something that is an instantaneous conversion, that's the only way that this works. Because like you said, pesos drop. Well, everything drops, everything goes up, and we can't anticipate that. If we could, then it wouldn't do that. It would just be completely stable, because we would be completely anticipating any raise or drop. So these things happen because of market conditions, a bunch of other things. But something needs to stabilize that, and so that, to me, is the point of the stable coin. But like any other thing that's created, you have to get the kinks out. And so I know people lost some trust in the stable coin with what's happened recently. I still have a lot of trust in the concept of a stable coin. So I'm not saying one specific stable coin, but I still have a lot of trust in the concept of a stable coin. And I think that we will come to a point where the stable coin is what the stable coin was designed to be. And that's going to be a great day, because we'll walk away from a lot of this stuff. And I'm not saying that backing it by gold is bad. I think backing it by gold is amazing. But, having a stable coin, something that is a true stable holder of wealth that has a very specific return, is arguably better than having it backed by coin, in my opinion, or by gold, in my opinion. So.
Yeah, I would agree. I like the idea of an algorithmic stable coin. The problem is the negative feedback loop that they experienced with Luna. If they could fix that, cool. I'm all for it. I really don't, as long as it maintains its purchasing power over an extended period of time. That's really all I care about. And unfortunately, even with a stable coin, that may not be the case, because again, it's dependent on how much of it exists out there, right? So if they're able to mint more of it, and they don't need to back it with anything. So that's really what the backing does, just so people are aware, is it limits the supply of something. It becomes fixed, or it only increases at a certain rate. So the Fed's mandate is to increase the money supply or have an inflationary supply change of 2% per year, because back in the day when they mined gold, that's about what came out of the ground, was the amount of gold that existed expanded by about 2% each year.
Mm-hmm.
So it made sense to try to keep that as the mandate. They haven't done that, obviously. But yeah, if you were to curtail or have a limited supply of something, if demand would increase and the supply stayed the same, the value of whatever it was would increase. So you would actually have a deflationary effect, just like we've seen with stocks here recently. The value of the dollar has risen in comparison to other currencies, and that's had negative implications for stock prices. They've fallen as the dollar's gone up in value, and more people are holding cash because there's more demand for the cash globally. You see other asset prices drop in value because it's not that those things are worthless. Those companies are still making money, but
Yeah.
because because the value of the dollar has gone up, they drop in comparison, and they are priced in dollars.
Yeah.
So, and the opposite will happen, and that's kind of why I see if people were to flee from the dollar in the short term, you could see a melt up in markets. That's kind of my financial thesis in the short term. Again, to your point, short term for me is the next 6 months. Sometime Q1, by the end of Q1 of 2023, I think we may see the loss in confidence in American companies like you were talking about, and maybe then we'll see a systemic crash, which I hope not. But
I don't want that to happen, but I think it's definitely a possibility, if things continue to move the way that they're going. What I would love to see, and I think you would agree with me on this, is a clean, stable conversion into the digital assets, digital currency, digital holdings, because we are ripe for that already. And I think as we make that shift, if we can make that gradually. Now, I don't know how likely that is, because the whales don't make money on a gradual shift, a clean, easy shift. They make money on the chaos. Yeah. So I expect there will be some chaos in the short term, but I think it's going to be like anything else. When it's all said and done and we're looking back on it, we'll say, oh, well, that was a natural progression, was to make that shift. And so, we probably need to wrap this one up, but I would say my leading words with this is something I think Warren Buffett said. Smart moves are made when everybody else is fleeing. Get in when everybody's running, and get out when everybody's running in, right? And so I would say be calm, do your research, pay attention to what you're looking at, and if all of your friends are saying get out of crypto, then maybe it's a good time to look at it.
Yeah.
Yeah.
I think the quote from Warren is be greedy when others are fearful, and be fearful when others are greedy.
Yeah.
And so I'm of the same mindset. When something looks very unattractive, that's when I'm interested in it. Yeah. And I tend to be against the consensus. So almost everybody I talk to believes we're ripe for a recession, depression, or we're already in one, is what most people tell me. And I like to be the contrarian and go the opposite way. And that's also why I tend to think there might be a melt up instead of the meltdown that everybody else sees coming.
Yeah.
So
I definitely agree with that in the short term. So I think we're on the same page. I was thinking more long term, but I agree with that 100% in the short term. I think it's definitely going to happen, and I think that there's advantages there. There's ways to take advantage of that. And I think it's going to be an interesting play to see that, as that kind of ramps up. Are people going to take their money and run? Are they going to take it and hoard it underneath the mattress? Or are they going to make the shift into the crypto? I would love to see people make that shift into the digital, because I think that that's where we're headed. And
I think they'll incentivize it, like you were talking about before, with these stable coins. If you can earn a higher yield by holding your cash in a stable coin versus in a bank account or traditional assets, that's where people are going to go. So
Yeah. And this is a little bit tax related, so I'm going to back up a little bit from our podcast earlier. But if you're smart with your crypto, when you go from one crypto to another, that's a taxable event, right? Unless you're in the business of that. So there are ways to hold your crypto so that you can make these conversions from a crypto into another crypto. I'm specifically talking about stable coins here. Make that shift into that without creating that taxable event or having the offset within the structure of what you're doing. So I know that can be scary for people. Oh, well, if I'm in Bitcoin and then I'm going to jump to stable because I don't know what Bitcoin's going to do, I'm going to get taxed and all this, blah, blah, blah. Be smart about how you hold. Talk to a CPA, talk to your financial advisor, right? Create the structure that you need to take advantage of this, because these are steps that you can take today that are going to 100% create the fortune of tomorrow for you and your kids. So that would be the thing that I would want to leave you with as we talk about the future of fortunes, is taking advantage of it now, looking at what's going on, exactly like Jake just told you. When everybody else thinks that it's a pig with bad lipstick, take a look at that pig. That may be a beauty in the making. That may be the frog you want to make out with. It may be a great opportunity to move forward. So pay attention to what you're looking at. Make good decisions. Surround yourself with the people that can help you to have the structure that's correct and help you to make good decisions, and will question you on why you want to do it. Because if everybody's agreeing with you, you're probably wrong. But if everybody wants to know why you're thinking that way, you're probably onto something.
I think so too. And so we'll get into that on the next episode here. We'll probably talk about structures and the way to do that in an appropriate manner to avoid taxable implications and make the most money from your money. And then maybe touch on another topic in another episode of how they might tokenize markets in order to do what you were talking about before, transition into this digital age. Yep. So appreciate you guys for joining us. Episode 3, rock and rolling. I hope y'all are enjoying them, and we'll see y'all on the next one.
All right. Thank you, everybody.